Hey traders, market update time. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, let's have just a quick look at the markets and let's actually see what's going on. Pretty much a nothing day across the board. But one thing I am seeing and one thing I am noticing is the lack of follow through that we're seeing in all the markets is something that is showing that it may be a sign of weakness coming into the markets. Now again, we don't know what's going to happen here. It's like, are they going to keep pushing it higher or not? But due to the fact that, especially the Dow Jones, if I bring up my trend lines, due to the fact that Dow Jones hasn't broken this high point up here, where all the other indexes, if we actually go to the S&P, almost got to its almost got to its projected point up there. The Russell's still stuck in that sort of upward channel through there, and also we've got the Nasdaq. The Nasdaq is just keep going up, still just slightly up, still, but you can see it still has actually made a high now, but hasn't closed higher yet. Right, this is actually basically, I think it's just a slight higher close than where it was last week. If I go back to the high point up here, the close for this price here was 5,218. 5,218. Today's close is 5,225. So we have made a new higher close for the Nasdaq. But with that being said, guys, we can actually see that it's actually continuing to continue just go up and up and up and up. And we will get a snapback. It will happen. We just don't know when. So same with the Russell, we're getting a nice move up through here. And the same for the S&P 500, having just a run up, but just a real lackluster follow through. Not much happening through there. And notice, even though we've had a decent jobs report, we've just gone sideways here. Really not much going on. So very little follow through. We had this good volume spike and then a couple of days of sideways movement. Guys, that is generally, when you actually see that, and I've noticed this time and time with my overall trading. And I've noticed this and so many times that now I actually watch for this if I get into a trade. Let's say for the market comes back down through here and we get a nice little up bar and I actually enter. Let's just say, for example, I enter here. Well, I have, over my years and years of trading, if we don't start to see some big movement really quickly like that, then if we don't see that, then it obviously has a possibility of it just completely turning around. But one thing I have noticed is when you talk about probabilities, just say the market goes down like this. Okay, the market comes down like that and have a nice up bar. So say for example, I had an entry here. I went long. All right, so I was going long through here. And then suddenly had a nice up bar. I got into there and I'd noticed the market would just do this. Just slightly, not really much going on. Slightly higher, slightly sideways, slightly higher. The volume would drop off, not much volume through there, and it'd be really nice setup. Maybe the market was stepping up like this here, had a nice downward move, had a nice pullback, and it'd have a nice step up to the high side. And then I'd notice the market would it'd be very weak. The buyers were weak. So this is what we're talking about, like chart reading action here, is that the buyers were very weak, meaning that as the market went up like here, then the buyers went very weak, and as the volume's tapering off, generally what would happen most of the time, we're talking like 90% of the time, or even like probably about 85-90% of the time, you would actually get a reversal in the price action, and the market would actually drop down. Now, due to the fact that we haven't even broken this high point yet on the Dow Jones, but we have on all the other indexes, is showing me that something is not right here. the Dow Jones will lead us around. Forget the transportation average. The Dow Jones is a bit of a hint on what's happening. Dow Jones is not making its new high point, where all the is not breaking its high point back here in mid-July, where all the other indexes are. It's something to be said. It's something you just need to keep an eye on that. Now, there's a few other things, guys, that I'm trying to keep an eye out for as well too. Let me actually. So that's the first thing I want to say there. All right. Now, the next thing I want to say is I want to bring up this chart here, and I want to squeeze it up as much as possible. I've also noticed this, guys, in my time of work in my analysis. I've noticed this is that if the market runs up and it has a nice bull flag and it breaks out, generally you would get a strong move, right? But even if you have a nice run up and a pullback, and the market would break out, even if it broke out a little bit, then went sideways a little bit through here, it would generally reverse, right? So what I was saying before, right, even if you have a nice formation and the market breaks out and the buys are very, very weak, meaning there's not much follow through, generally that was a reversal pattern. All right, so just bear in mind with that. But I've also noticed that when the market has an extended run, you can see basically from this point here to this point here, we've just had a big run. When the market has an extended run and then creates like a flag formation, this is actually quite weak. It's actually a less probability flag formation, because the market's had such a big run up and then it's created a flag. I can't count how many times I've actually traded the flag where the market ran up like this, it'd break out and just do nothing and then break back down, because we already had such a big run up. Now, if the flag formation was like, say, through here and then the break up, that's a really nice flag formation. All right, so first thing is that because the market's had such a big run up and then we've had this flag formation, that to me gives me the odds against me of that flag working out. But then on top of that, as I was saying before, now we're getting the breakout and now we're just getting this sort of a couple of sideways days, very, very, very lack follow through. That's also showing me to be careful that it's actually all these signs of weakness. Now, it doesn't mean the market's going to go down. I'm not calling a direction here. I've just seen we have more of a probability going down than going up. So by looking at the charts, I can see that that's what's happening here. And on top of that, these are the two main indicators that I always look at, sort of maybe once a day, but I don't like to look at my indicators first. I like to look at my price action first. The next thing I do see, guys, is I'm looking at my stochastics and also my RSI, and we're getting a possible divergence happening, a sign of weakness, where this is basically almost a double top. We're getting a sign of weakness and turn around. So it's definitely something to be keeping an eye out for. So looking at that, guys, and now we're going to go to the S&P chart, and now the S&P chart is showing that we're getting a weak divergence. And yes, we may get a little bit more upward move, but when we start to get there is a powerful combination. And that when I have this slow stochastic here, and it's not a magic tool, doesn't work every time, but it gives me a gauge of what's happening internally. There's something powerful that when the slow stochastic, when we get this slow stochastic going down and we get the faster stochastic building strength and the market's making the double bottom or a slight lower low, which is creating that divergence. The fast stochastic is building divergence above my slow stochastic, generally get a run up, right? But you need to have it. What do we have here? Same thing here, right? We have the slow stochastic down. We had the faster stochastic building strength. You see the double bottom through there? And then look what happened. We took off. Now we had this divergence pattern here. We had this divergence pattern here. And they've all worked every single time. But looking at this price action and looking at that, not every divergence works all the time. But if you notice that when we start to get, same through here, right? If you start to get like this one here, the slow is running over and you start to get like a slight divergence. That divergence was that point up there, from there to there, and then it rolled over. Now, I'm not calling this all the time, but look at this back here, right? You can see this back here. Slow is rolling over, or the slow is going over at the time. The fastest stochastic is giving me that divergence. That divergence was that point up through around about here somewhere, and the market came off. So we're looking at the probabilities of what I've just said with the price action, and looking at the probability of this stochastic here. The slow stochastic is going up, but look at this faster stochastic. We're on the verge of having a potential divergence, guys. I am seeing nothing but weakness in the chart. Yes, we may get a little bit more up movement in the short term because that's what can happen. But I'm seeing a lot of weakness. We're seeing the same thing on the stochastic or the RSI moving down, and the same thing with my stochastics. And if it does roll up through here, and we do start to roll over like that, and we start to get this divergence, then I believe we're in sue for a nice, decent pullback. You can see it here, right? So every time we've got a divergence with my slow stochastic going up and my faster stochastic giving divergence, it was that point there. Let me go blue. That point there. Any other time, it was this point here, and now we're getting this point up here again as well too. Do we get the reversal? Now, when we've had the divergence with the stochastic, the opposite, slow stochastic down, fast stochastic up, that was the bullish divergence, and that was the bullish divergence setup. And you can see that these setups are quite powerful, and my goodness, do they work really well. Now, again, guys, it doesn't work all the time. In fact, I actually missed one here. We have this we have this slow stochastic up through there, and we have the fast stochastic going down through there. Easy, Tiger. And then we have this fast stochastic going up through there. That was that point through there. That was actually that point through there. So it actually did continue running up, and then we just went sideways. So this one here was that one there, was that point through there. So we didn't get a reversal that time. So guys, as I said before, it doesn't work all the time, but it's a gauge. It's a guide to see what is going on. But generally, when we start to get these divergence points and these divergence points, and you can see that the divergence in the stochastics, especially if it's met with the, especially when it's met with the RSI, it's just truly powerful. What I mean by that is that when you're getting divergence with the RSI, the stochastic and the RSI together, truly powerful. Look at this here. My stochastics and RSI coming together. Same thing here. Same thing here as well too. So, but the divergence was actually here. So the stochastics actually met the divergence here, but where my RSI was giving me the divergence here. So let me actually see if I can see anything else. So yeah, so you can see because this is looking at, this is a 14. This is a 14 where this is looking at only over the 9. So sometimes my stochastic is going to give me a lot more movement than the RSI would as well too. So guys, it's not looking promising. It's not looking good for a lot more upside right now. But then again, guys, it may have a little bit more upside. We just got to keep an eye out for that. Looking on through the Russell, and the Russell's doing the same thing. It's creating higher highs, but we're getting that divergence now, and the divergence is very evident of where we are right now. So we could be rolling over here, and that divergence, guys, it's looking very weak. Even though the market's been going up and up and up and up and up, it's not following through, and we haven't had a decent pullback. So I'm not really liking this for a lot more upside, guys. And the same for looking at the Nasdaq. Again, I'm getting a lot more bearish signs than bullish signs. I'm not a buyer or seller in this market right now. Just because I think this market's going to go down, doesn't mean I'm going to short this market, because there is no setup for me. I'm just giving you what I'm showing you here. I'm just keeping you in tune with what the market's telling us. But again, guys, as I said before, an announcement could come out and shoot this up higher. So that's where you don't want to be stepping involved with this. But if you're looking at probabilities, when the market has such an extended run to the high side and we start to get divergence here on the stochastics, it's a real high probability. Real high probability. Look at this one here. fast stochastic up, slow stochastic down. You can see that was that point through there. Same thing through here. Same thing through here as well too. This one here was just a doozy. You can see here, fast stochastic up. We have slow stochastic down. Again, guys, it doesn't work all the time, but when it starts to work, when you start to notice these patterns, it really does work quite well in the market. So guys, when the market has such an extended run to the high side, and everything I've said in this video so far, you can see where my thoughts are at right now. Again, it's all about probabilities. We still have a probability. We still have a small percent chance of it continuing up, but the more this market does what it's doing right now with low volume, lack follow through, extended, it's already had a bit extended run to the high side. We're already due for a nice decent pullback. We're getting divergence on the stochastics and RSI is saying that we may be in due for a decent pullback soon. And I believe, and I'm more bearish now than I have been for the last couple of weeks. The last couple of weeks I've been saying that I'm being quite bullish, but I'm now getting more on the bear camp than ever before. So, hey, let's just see what happens, and I'll talk to you guys soon. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course, and I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.